I think we're still drifting around here. One of the things, the backdrop, we have strong earnings growth. We have an economy that's doing well. Regulatory backdrop is positive. But there's a number of things with the market that necessarily aren't working that are having us concerned. The technicals, we're still seeing lower highs and lower lows. We rallied right up to the 200-day moving average last week and sort of ran out of steam. From the reaction to earnings results that we've seen so far this earnings season hasn't been as positive as one would have hoped.
Profit growth is up 24% year over year for the companies that have reported. It's the greatest that we've seen in years, if not decades, if not ever, and the stock market doesn't care.
Because they're going to slow, right? The profit growth is going to slow.
Right. So for, how much better can it get?
Yeah.
But then you also have the backdrop of the Fed. With the Fed, they're gradually hiking rates, basically every other meeting, but they show no signs of becoming any less hawkish. But they're also, working off the balance sheet, which is, hiking in the background.
It's a double tightening.
It's tighter than these gradual hikes would suggest.
Should they be backing off? You're saying they're showing no signs of it. Should they be?
Well, I think, we are starting to see slower growth. International economies are very weak. We do a monthly survey of consumers, our Consumer Pulse report, where we ask them about all things economic related. And we're seeing, things aren't falling off a cliff by any stretch, but they are certainly showing signs of slowing. And so I think, the Fed's too, always is focused on jobs, and jobs is usually the most backward-looking indicator that there is.
What about Netflix? Earlier on in the show, to make sort of a hard turn, but we had an analyst that had moved to a buy and upped his price target, but you don't agree, rather, with that.
Well, so, it was interesting. So in Netflix, in the same survey report we do, they definitely have pricing power, which the analyst suggested, and their international markets are doing good. What is a little bit concerning is the U.S. market. We're not seeing any, for the last 2 years or so, we haven't seen any growth in subscriber numbers as far as our surveys, what are looking at. And usage and engagement with Netflix has also declined. So in our most recent survey, 68% of subscribers had used the service in the last week. That number's been as high as 80 in the last couple of years. So as people may be saying they're willing to pay a lot for it, but when you start thinking about it, if you're using a service less often, you're going to be less likely to pay for it.
What do you expect is going to happen as we move into 2019 in the markets and towards 2020?
I'm still trying to figure out what's going to happen tomorrow after the election here.
Sometimes it's easier to forecast deeper than it is immediate.
So yeah, that's a great point as well. And I think from a long-term perspective, the U.S. economy, we talk about all manner of things, elections and how it's the most important election of all time. The U.S. economy continues, will always, with roadblocks, see growth. So I think next year, I think there's a lot of complacency on the part of investors that things are going to be good, and that is something that you
consensus worry you?
Well, you don't always want to have, you want a wall of worry in the markets. And, every sell-off we've seen over the last 8 years has always been, okay, this could be the beginning of something bigger. This most recent sell-off, consumer confidence, good time to invest in the stock market, actually increased in October in the face of that sell-off. And that we don't normally see.